So let me tell you my crypto investments, my Bitcoin investment story, because it highlights it the best. Because I just recently went through the maths of this and I kind of shocked myself. So I first heard about Bitcoin during the European crisis in 2012. I realized that this was a solution to a lot of the global financial system. And I wrote the first macro strategy piece on Bitcoin probably ever published in Global Macro Investor in 2013. And it was driven by a friend of mine, Emil Woods, who's is very well known in the space, and Chad Cascarello, who are Global Macro Investor subscribers, saying, listen, you need to look at Bitcoin. So I looked at it. They happened to have started an exchange called itBit, which is now Paxos, and I ended up buying Bitcoin. And I stuck a decent size in because my analysis was, it's at $200 now. If I back out the analysis versus the stock to flow of gold, this is worth $1 million with the gold at these current prices. Therefore, it's underpriced. I hadn't figured out anything else about network effects, but I kind of understood that this was potentially important. And I assumed that it would go to zero. So my downside was 200. My upside was 999,000, blah, blah, blah. And then I said, I assume that I am a total idiot, which I try and assume most of the time, and therefore I'm 90% wrong. So if the upside is 100,000 and it's $200, it's the best risk reward any of us will ever come across in our entire lives, and maybe one of the best risk rewards of all time. So I took that bet, right? Macro thesis, did the work, said this is probably a 10-year play, and I'm going to hold it. So first thing that happens, I put the position on, it goes up 100%. It goes up 100% a month and 500% in the next 4 months. I'm like, holy shit. I don't sell anything because I've got a long-term thesis and it's fresh in my mind. It then falls 85%. But luckily back to my entry level. So it gets back to 200. I don't do anything because I had a long-term thesis. And then I kind of forgot about it. And then 2017, it starts coming to life again. And it's starting to scream higher. And now it's at 2,000 or 2,200. And I'm like, okay, I'm up 10x, which is good. My thesis obviously was a lot more. But I'd forgotten that because now the forking wars had started. And I suddenly thought, is this existential? Is this the S-curve moment where it fails? So I sold it. It went up another 10x to 20,000. I didn't worry about that because I'd made 10x and it was okay. It was a good trade. And I was worried that it wasn't going to be able to play out my thesis because of these forking wars. And then it fell 85%. I wasn't in it. And eventually I got in April 2020. And I can't remember what my average was. Call it 6,800 or something. And then I'm still long and then, rotated into ETH and did other stuff. But anyway, so great trade. One of the best trade of my life. I went back and looked at, if I just kept my initial investment at $200, I would have done, I can't remember that I'm 5 times better. Even though the size that I added in March 2020 was massively larger than the first size
Interesting.
It still didn't work. I'm like, huh. And then I thought, okay, if I'd actually followed my thesis, which is when it gets very oversold, and it gets to that kind of logarithmic, the bottom, the 2 standard deviations oversold of a logarithmic channel or whatever, if I'd actually just doubled my position every time, but not doubled it, sorry, just added the same amount as my initial seed investment, I'd have done like 25x. I'm like, okay. So what I thought was a great trade was actually a terrible trade because I didn't trade my plan. And I didn't think about what I was trying to achieve. So that's leads into the question about, okay, the market sell off now. I'm immensely comfortable because I see the network adoption. I've got even more models to understand how this space works. I see how broad and deep the talent, the adoption, the kind of conversations that Greg and I have with people all the time, it's like seeing the future. So therefore, the volatility now, I've been adding as fast as I can, scraping the sofa for coins or anything to put more money in person. So I distill everything into imagery. So which is why macro so appealed to me, because macro is this massive 3D, always changing map of the world, of all the asset classes, how they're interrelated, the economies and the news flow. And I found I can hold it in my head. And I can kind of spin it around and look at it and take different component parts aside. And therefore you can simplify it if you can make a picture of it. And so I just create that mental picture for others, because most others struggle to see the connections, to see how this could be. People can think one step ahead, but people don't think 2 and 3. And 2 and 3 is where I'm pretty good at, which is longer term, knock-on effects, how this is going to play out. That doesn't mean I get all of them right, but I've been consistently pretty good at that over time. And I can explain it to people in a way that they understand it and can grasp it, whether they disagree or agree. I mean, again, that's the beautiful thing about Global Macro Investor. I've had people who barely ever agree with me, and they've been subscribers for 18 years. Paul Tudor Jones told me a great thing was, what makes a great investor in his mind is somebody whose idea horizon matches his trade time horizon. Right? A lot of people think, oh, the dollar's going up over the next 6 months or 2 years, and they trade in and out of it. Or the opposite is true, is they're short-term traders by nature because they have to be. You have this monthly P&L, and every position basically gets reset every month because your investors go, well, why did you screw up last month? They don't look at where you bought something and where you sold it in the industry. Unlike VC, in the hedge fund industry, it's where you were marked last month.
Yeah, it's mark to market.
So it's crazy. So what it means that everybody's time horizon is this 2 week to 2 month time horizon, yet your idea horizon, because it's macro, is in economic terms, which is 18 months or so. You know, to go from peak economic cycle to trough recession, that's a 2.5 year thing. And it gets interesting to trading from macro for about an 18-month period, but you can't do it. So I'm like, this is useless. So I kind of defiantly left and decided to opt out of the rat race and move to Spain, because quality of life was something that always mattered to me a lot. Because
you were in London? You were in London before? Okay.
Yeah. And I thought, what's the whole game for if it's not for quality of life? I mean, money's just an output, but the real thing that you're actually working your balls off for is quality of life. So I moved to Spain, and I realized that I'd had a lot of experience in macro versus most. And I had also learned how to write. I was writing at Goldman. We had this group chat that was very early group chat days, like an AOL group chat thing that I used to run for the whole firm, and became very well known for it. So from the chairman down, everybody read my stuff. And then I wrote an article after a business trip to China when I was at the hedge fund called There's Something Wrong in Paradise, when I turned up to China to expect to see all this, all the amazing stories I was reading and getting from analysts, and turned up and there was just empty buildings after empty buildings. And I'm like,
you and Carson Block.
And I'm like, oh my God, this is a disaster.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.